Well, hello, everybody. Steven Sitkowski here. Welcome to this week's edition of my Market Insights. Hope you are well, wherever you are, whatever you're doing. Hope it is a great start to the week. And I can see one little error here. That's the third. It's not the fourth. I'm ahead of myself. I don't want to miss a whole day. How about you? Want you to know that everything that we do here is for educational purposes only. It is not intended as investment advice. So it's moving to markets. And the markets just kind of seem to be stuck. There's a little bit more of a negative bent to things. And I believe that just the potential fallout from tariffs continues to be top of mind for investors. It's like Warren Buffett said, these tariffs won't get paid by the tooth fairy. That is true. Somebody's going to have to pay. I saw where the CEO of Chipotle said, any tariffs, we're going to pick up that cost. Um, but it is inflationary. And as costs go up, demand typically does go down. And I don't think any of us really know yet what the economic impact is going to be. Or is it going to trigger some geopolitical event? Is it going to trigger a trade war? And I tell you what, the markets don't like, they don't like uncertainty. And right now, there's a whole bunch of it. All three key indices pulled back in February. The NASDAQ was down, I think, 4%. NVIDIA continues to struggle post earnings report. It wasn't like they had a bad earnings announcement at all. In fact, they had a good one. Um, but I just think that there's general concern. And so you're going to start maybe taking some profits from the high flyers. And NVIDIA certainly has been that. 10-year Treasury, that's been dropping again. That sort of correlates to economic outlook, which is starting to weaken. I'm also seeing initial jobless claims go up. Last week, there are 242,000, up from 225,000. That was the estimate. And oil prices, they've ticked below $70 a barrel, 69.52. Nothing really going on with oil at this point. What to watch this week? We've only got Thursdays and Fridays. I'll tell you what, let me just pull that live for you. I'm not quite sure how that happened, but I think it's really important. So if you want to know, where that comes from, you can Google economic news this week. It'll bring up Market Watch. I'm going to go to the calendar. So let's check this out. So today we had the final manufacturing number, which was an improvement over last month, from 51.6 to 52.7. Anything over 50 means expansion. So that was a good thing. Construction spending down a little bit. ISM manufacturing, again, the forecast 50.6 came in at 50.3, kind of a wash. Nothing much going on Tuesday, a little bit of Fed speak. So starts to get interesting on Wednesday, ADP employment, how many private payroll new jobs got created. Last month it was 183,000. They're only forecasting 143,000 this month. Factory orders are supposed to improve. The services number is about a push. And then we get the Fed Beige Book, which is basically the Fed's interpretation of the economy. So that could be fairly important. Initial jobless claims, they're forecasted to come in Thursday at 243,000. 242 is where we were, I told you, last week. Nothing much on the trade deficit for us to worry about. And then we have the jobs report coming in on Friday. The unemployment rate is supposed to tick up from 4% to 4.1. That is the forecast. Hourly wages only moving up 0.3% versus 0.5 last month. And wages year over year moving up at 4.1%, which, after taxes leaves you at 3, and that's just about where inflation is. So that's what we're looking at. I'm glad that we did that. I would have hated to have eliminated that. Last week's heat map. So you see a whole lot of red on the tech side, plus consumer cyclical, including Tesla. I think with Tesla, there's some concern about the attentiveness of Mr. Elon Musk. Is he watching the store, or is he out working with the president? And I know the opinion on that is very much split, so I'm not going to comment on it one way or another. But I don't blame a shareholder for going, hey, I'm watching the founder and CEO of this business, and everything that I hear about him has nothing to do with our company. I think that's a reasonable concern. Google was down 5%. Here's NVIDIA, which, like I said earlier, has struggled since the earnings announcement, where they beat on the top line and the bottom line and provided really good guidance. I don't think that's logical. I generally use opportunities like this to buy more shares of NVIDIA. And Broadcom down 6.7, but we also for the last week see a whole lot of green. Consumer staples or defensive, whatever you want to call it, same deal. Great industrials look good, REITs, utilities, healthcare, financials. So all of the more conservative, more defensive parts of the market went up over the last week. Tech is what dragged things down. 1-year heat map, tells a different story. Healthcare, not so great. Then you have companies like Merck that are down 28%. And the financials for last year have definitely been solid. NVIDIA up 52% even after the pullback. Broadcom 50%, Apple 32%, Oracle 47%, Tesla up 48%, Meta 37%. So there's been plenty of money to have been made. But you've got to be fairly selective, and your entry and your exits are going to be super important. Market sentiment. This, of all the things I'm going to show you, is the most telling, maybe the most shocking. So on a typical week, when market sentiment is advertised, 37.5% of independent investors are bullish and 31% are bearish. Now, 19.4% bullish, 60% bearish. I cannot remember ever seeing 60% bearishness, especially when you consider that we've just come out of 2 years that have produced a total return in the neighborhood of 45%. And, things haven't been bad this year. We're about at break even. Now, something that has changed pretty dramatically along with sentiment is we're seeing a much higher probability for rate cuts. So we're expecting the first one now, overwhelmingly now, in June. So there's only a 21% chance that there won't be a rate cut in June. That leaves a 78.9% chance that there will be. Then we're expecting another one in September and another one in December. And of course, the markets love low interest rates. So if that happens, this would definitely be a catalyst. But of course, this is a moving target. So the 1-year sector returns, S&P 500 is up for the last 12 consecutive months at 15.58%, which is obviously very solid. The outperformers, financials, utilities, communications, staples, discretionary and tech are kind of a push, so are industrials. Then we get a fall off with real estate, energy, healthcare, and down at the bottom is materials. All right, let's take a look at the charts. Check in on the Qs and the S&P 500. So the S&P 500 is trying to get back to its 50-day moving average. It's basically sitting right on top of it at the moment. So, the last 6 months, we've seen the market go from 55.03 to 59.52. That's about an 8% gain in the last 6 months. Nothing wrong with that. We did cross below our 50-day, but then notice we came right back. So we really are at a bit of an inflection point. I can't tell you that we're bullish or bearish. We're kind of sitting back, watching, and really just evaluating individual stocks. You don't want to be buying the market anyway. You want to be picking the best of the best if you're doing it the right way. How do the Qs look? So this is big NASDAQ stocks, and it's dipped further below the 50-day than the S&P, did not recover back to it. And it's trying to get back there, but we will see. So this is a bit more dubious than the S&P 500, but not by a lot. We finished out last year pretty strong on our trade ideas. So what it ended up looking like. So we closed more than 100 trades. Average return is 15.8%, not for the year. In 17.3 days, we've come pretty close to 1% per day. So on an annualized basis, that's over 200% for last year. Past performance doesn't guarantee future results, but bragging rights are bragging rights. So we'll take it. All right. That is all I have to share with you today. Other than that, I hope you have a splendid week. And we're getting some snow in the mountains. So that says skiing on Friday. Of course, after I roll over all my covered call trades. All right. Have a fabulous week. We will see you next week. Until then, bye for now.